Welcome to the SDA Housing Podcast, brought to you by Ndis Property Australia. Before starting this episode, we need to provide a general disclaimer. Information contained in this podcast is general in nature only. It does not take into account the objectives, financial situation, or needs of any particular person. You need to consider your financial situation and needs before making any decisions based on the information in this podcast. And you should consider seeking independent and professional advice for your personal circumstances. All right, let's begin.
Hello everybody, my name's Debbie from Ndis Property Australia, and you're listening to the SDA Housing Podcast, a show that explains, highlights, guides and brings awareness about all things SDA in this ever-changing NDIS world. Min, hello.
Hey, how are you?
Haven't had the company of your, let's start that again. Haven't had the pleasure of your company for quite a few episodes now. You've been busy doing other things.
Yeah, mate, I think it's been a very quiet world of NDIS, SDA. Well, a lot of busy. It's been busy in the NDIS world as well, with a lot of providers struggling with everything in the NDIS. But yeah, it's a new world, a new age for NDIS for everyone.
So, yeah. Well, look, this is our final episode for 2025. So we wanted to just, do a quick recap of the year that's been and where we're going, what we're doing, and just where the industry in general is at.
Yeah. So Debbie, how did you find this year in SDA?
It has been a very different year. So at the end of 2024, probably in about November, we were advised that there was some major changes coming into the lending from the main lender to NDIS. And I don't think we knew it was going to have quite an impact. I don't think we realised quite how total the impact was actually going to be and how quickly it was going to take effect. Those lending changes were revised in February, I think. And essentially what happened was that most people who would previously qualify to get financing for an NDIS property no longer do. So we're still getting a lot of interest. We were still getting the same level of interest of people wanting to buy and looking into the industry. But unfortunately, people just were struggling to actually get finance and get these deals across the line. So it has changed the industry really quite significantly. We saw a lot of focus going into people looking at doing their own development, which leads into our fee-for-service work with SDA Advisory. And we've, focused on really finding better properties for sale, which has partly been us going out and looking for different avenues, as well as just the market shifting that way. We're obviously seeing more properties coming back on the market for resale and different types of buyers coming in. Hey, Min.
Yeah, I mean, the buyers now really are seeking second-hand, or not second-hand, but built and tenanted. And they know how, everyone's aware how hard it is to find participants in this day and age. The NDS is very much what's the word? Roadblock, filtering process. It is more challenges to get approval of SDA and normal NDIS funding as well, SIL funding as well. So we're seeing a lot of challenges there, and that this is really affecting the SIL providers and the SDA providers big time. More so the investors, Debbie. A lot of the investors have really struggled the last 2-3 years on the investment in terms of finance challenges, valuation challenges, provider challenges, participant challenges, finding source of participants for tenancies. And what we've seen in the last, 3, 4, 5 years now is that very much a one participant outcome for houses. It's hard to see 2 or 3s out there.
We very rarely see that. So yeah, look, it has definitely been a challenge for investors who own a property, getting an income on them that is going to make it viable. And this goes hand in hand with the challenges overall in the NDIS that we're seeing, which really don't have anything to do with the SDA investment space, but are just those funding challenges that still providers are struggling with, that SDA participants aren't getting the right level of funding. They're not getting the right level of SIL funding. SIL providers are struggling to make ends meet with the houses that they're working out of, if they've only got one or two tenants in the house. So everyone is struggling somewhere. So this is, I guess, the reason we're seeing more properties coming back on the market. Now, what's really interesting, and this was actually kind of covered a few episodes back, Grace and I don't know if this episode has been released yet. Grace and I were talking resales, but basically we were talking about the fact that people go into SDA expecting high yields. Now, what is a high yield these days? I mean, in the general property investment market, what is a good yield? 3.5%, Lynn? Maybe 4%?
That's average.
That's average? So a good one might be 5 to 6. If you can get more than 6% net yield, is that not good? And when it comes to an SDA property that has one tenant, we're still seeing yields quite commonly in the 6 to 7% mark. So it's still not a bad outcome. But for the person that originally built that property and purchased it with the expectation of 10, 15% or even more yields, they're not getting that. And that's why some of them are wanting to get out.
Tim, another thing we've never discussed really is the capital growth of market. So I'll give you an example of this topic here. And this applies to Brisbane and Perth as well, Debbie. Big markets have done well in the property investment sector. Well, not property, the property market sector, yeah? So I saw a video on YouTube the last night saying Townsville's doubled in value the last 3 years.
Wow.
So those people who went in as SDA investment 4 years ago at that 600 grand, 630 grand price point, yes, they overpaid for the SDA house, true, but even still, on the normal market today, Debbie, a 4-bedroom house, even though it's, yes, wheelchair friendly and spacious, and that's still at least 650 to 750 grand right now today. So those investors have not lost money. They actually have picked up some capital gain there to actually give some company that they haven't lost money on the capital value. And that's Townsville doubling in 3 years. Brisbane has doubled in the last 5 years. Perth has doubled in the last 5 years. So from a capital gain perspective, they're sort of okay. They haven't lost money per se. They've lost the opportunity of the income yield from the tenancy of SDA participants. Yes, they've lost that opportunity there. But they've also have cost money of mortgage payments on empty houses. Yes. But from a capital perspective, they have not really lost that much money.
Yeah. Not in every area, obviously.
Given the property boom in Australia the last
probably the only place that's not really happened is Melbourne. But, we don't just keep an eye on all the SDA data and stats. We keep an eye on the property stats across Australia as well. And look, Melbourne is showing all sorts of indications of it starting to increase in value. So that may not, really show any capital growth over the next 12 months. But I think in a few years' time, you'll start to see the Melbourne values also increasing.
I think anyone looking to invest in SDA from now on should use the word commonly thrown around a lot in the SDA world is alternative use value, right? So when you think about alternative use, it goes back to alternative use being normal property asset class. So is it a good area? How's the yield from a normal perspective? Because that's how lenders now calculate the lending now based on the market rental yield, alternative use. How's vacancy? How is infrastructure? How is the schools, the shopping centres, the amenities? Because at the end of the day, if it doesn't work out, this SDA thing called the SDA property, or what we call it, what is its alternative use and value? It's going to be a normal house. And is the normal house going to be in an area of growth, demand, families, infrastructure, income? What's the profile? So you got to now, I think, add the element of normal property investing filters as an extra layer to the SDA investing, Debbie. Don't you agree?
Yeah, very, very much so. So we've also seen, I think we started on this thread, a change in who is looking at buying. One of the things that we've noticed, but particularly in the last few months, we're getting a lot of provider businesses now reaching out, looking to purchase for themselves, either as an investment, but more so as a property that they can house their own clients in, that they actually own. So they're not going to be operating it as the SDA provider, but they already have clients that they look after in rental properties, and they want to actually give their clients security of owning that property forever. So there's definitely a lot more interest there from providers looking to purchase. Cash buyers, there's a few cash buyers out there that are still looking to find an opportunity that is providing, as I said before, a relatively decent yield with a potential. So whilst we're still getting inquiries from people who have not really looked into this in the past, just starting out doing their research, there's a lot more understanding and knowledge now from within the industry and from more sophisticated investors who are looking to pick up good properties that are going to service them well into the future. So, I think that's really pretty much what we wanted to cover of the year that was.
And then also wish you all a very Merry Christmas in this hot summer, which is coming, or a wet summer, depending where you are, because there's always storms and wet weathers in the summer period.
And to hopefully be able to give you a little bit of an early Christmas present, we are looking at an avenue at the moment of potentially having quite a number of properties being put up for sale that are built and tenanted or built and vacant. So we can't tell you any more at this point, but watch this space. We are working very busy behind the scenes to access this new avenue of potential properties for sale. But very quickly, Min, what are you up to for Christmas? Normally it's me going away, but not this time.
Nothing much, just going away to the interstate, visiting friends and family, maybe a little trip overseas. It's still paying it all, yeah. I don't want to divulge too much, yeah.
Oh, secret squirrel stuff, yes. Okay.
Yeah. I'm going to the South Pole, see who's down there.
Actually, I think that's someone else in our team. But anyway, I'll be around this year. Normally I do take off over the Christmas New Year break. But yeah, look, we do close down as of the 19th of December for a few weeks, but there will be skeleton staff on board. If anyone has any queries, if you'd like to drop us an email, we will get back to you as soon as we can. But that is goodbye from us for 2025. Thank you very much to all our listeners for downloading and listening to our episodes, in the hope that you've all learnt lots this year. We certainly have. We've had to, again, adapt and change in this ever-changing world.
But because of the lack of, updates and not much action in the gossip world of SDA, we're reverting to more of a one podcast every 3 weeks or so. So nothing too drastic like the past where we were doing 2 a week. Now it's pretty much one every 3 weeks or so.
Yeah, as you all know, if anything does happen, we're straight onto it. Then we will issue an episode in a timely manner. But we'll still be here next year. So have a wonderful Christmas and New Year, everybody. And we will see you in 2026.
Bye-bye.
Bye-bye.
We hope you enjoyed this episode. Please make sure you are subscribed and following us so you can keep in the loop with all of our upcoming episodes. We would really appreciate it if you could leave us a 5-star rating, a written review, and to share this podcast with those that could benefit. Until next time, catch you on the next episode.